Why pay more for your precious metals from the big guys with offices on Wall Street and who bank with JP Morgan? Get your fizz from the doc at sdbullion.com. Metals and Markets is sponsored by DNA Precious Metals, a near-term producer of the Montauban tailings mine in Quebec, Canada. DNA Precious Metals trades on the OTC BB market under the symbol DNAP.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets. Joining us once again. It's been a couple months here. Welcome back to Turd Ferguson.
Guys, thank you. It's always a pleasure.
Pleasure's ours. Big moves in the markets this week. We had the Fed shocking the markets on Wednesday, failing to announce even a marginal taper to QE. Just about everyone expected at least a $5 billion taper to give the Fed some sort of credibility, but the Fed refused to taper, and the metals exploded on Wednesday. Silver up over $2 intraday, gold up 75, and it set the stage for what many called, even CNBC called it, the end of the gold bear market, thanks to Mr. Bernanke. So a lot of excitement coming back into the precious metal specter, and then we had the big capping and smash down here on Friday, guys.
Indeed, and if you look at what happened the day before as well, too, pressure was put on the sectors such that it kept down expectations. I mean, normally you'd expect to have a big follow-through because supposedly we had this gigantic sentiment shift. In other markets where there's less manipulation, you would normally see a follow-through day on a huge shift like what we saw on Wednesday, but that it belies the hand of the cartel's action. And then, as I noted in the article I published earlier today, you can actually see the capping efforts that came well before Bullard's appearance on Bloomberg's surveillance television program, which began begins at 7 Eastern, but his actual appearance was around 8 o'clock. So there was something like 5 or 6, depending on how you count them, cappings in the silver spot market that were just a hair underneath the previous day's trade at the exact same time. And that is a cartel footprint of an algo program. You can just see it in the chart. It speaks for itself. So the table was being set, and then Bullard did his jawboning bid, and then the momentum picked up, and gold and silver sold off, as well as, quote-unquote, other risk assets. But, the media is spinning this as if it was something that Bullard caused, when in fact it was cartel table setting in advance of Bullard's speech.
Really the same thing we saw early in the week, Monday, Tuesday, Wednesday, to prepare the metals for the shock.
Even a week before that, too. I mean, it all began in, September 1st, basically.
Yeah, Turd picked up on that on, I think, Wednesday morning as well, and I kind of had the same feeling with just the hard hammering early that they really needed to get control of the price of gold and silver prior to the announcement. What's your thoughts, Turd?
We've been seeing it for several weeks, like you said, since September 1st. I mean, that same capping algo, if that's what it is, was run when we were trying to get back above 1,400 after we fell back in early September. And then there was a day where, I bet if you were to lay the Thursday's chart on top of this day, whatever it was back in early September, when we couldn't get through 1,390, and then the rug was pulled out from under gold the next day. At the end of the day, it's just a joke. I mean, the market is a farce. It's not even a market. That money, that universal sound, millennially sound money, is treated this way and priced this way is like I said, it's a farce. There's no open interest. The open interest in the gold pit is maybe 2/3 of what it was a couple of years ago. There's hardly anybody in silver. It's just nothing but these computers that trade back and forth, and the cartel leads them by the nose into whatever position they'd like. The Commitment of Traders report came out a couple hours ago. The survey was taken Tuesday, 24 hours before the Fed lines were released at 2 o'clock on Wednesday. And it shows. I mean, the speculator side moved 14,000 contracts net short, and the cartel moved 14,000 net long. 24 hours later, price flies up $60. It's then capped. You could see if you follow the open interest every day. Then yesterday, the open interest came right back out because all these shorts were covered. And then what happens? Price gets slammed back down today. Everybody then all the spec money that covered and went long yesterday gets the door slammed back on them today. The biggest fools are these more on hedge funds and money managers that continue to play in that arena and just get their rear ends handed to them on a daily basis. The cartel's in charge. They remain in charge. They will remain in charge until the whole fractional reserve system breaks down. I mean, it's just at this point, that's all that's left.
And the trigger will most likely be the reserve and trade status of the dollar giving way. And it was actually a really important story earlier this month. I believe it hit on September 6th, where China and Russia agreed to exchange Russian oil for Chinese yuan. And, you know, that's nibbling away at the petrodollar standard and is a huge kick underneath the table, the legs that hold up the dollar. And, of course, we had the whole G20 meeting that, you know, ironically, actually, I think back in May, if I'm not mistaken, it was when you were joining us the last time, Turd. We were actually talking about that back then, and then there was this news story out of a Turkish media organization that covered that whole advanced warning about the G20's agenda being about the U.S. dollar and switching eventually to institutions that could support taking the BRIC trade, which represents 25% of global trade, off the dollar standard. And here we are. We have this war effort with Syria, and everyone and their dog in the U.S. media talks about the G20 meeting as if they were meeting to talk about Syria.
Yeah, exactly. Like that was the agenda all along.
Right.
No, I hear you, and it will likely be something like that. You know, I think the idea, you know, because you hear this in the gold community, you know, that I'll pick on Eric King for a minute, you know, that this 45-year veteran says gold's going up 5,000%. You know what? Like, yeah, it may, but it'll be in a revaluation almost overnight. It won't be because the cartel will just sit back and manage an ascent at 100% a year. You know, I mean, when the system breaks, the system will just finally break, and the emperor will be seen for being naked short with no clothes. And everybody will look around, scrambling for their gold, wondering where it is. Do you guys know we just lost another 1.8 metric tons out of the GLD today? Right. The GLD inventory is back down to 910 metric tons. The low, I mean, it's now down 32.5% for the year. So now there are 2 bars where there used to be 3 just 9 months ago. And we're only 1 ton above the low in the inventory that was seen on August the 8th. So price has recovered, but no metal has come back in. No money has come back in. I mean, again, it's just short covering electronic trading of these paper derivatives in New York, where the banking cartel just leads the market wherever they want it to go.
Right. On the retail side, since July, we have not seen 1 ounce of gold sold back to us at ST Bullion. We've had silver sellers have come just in the past week, especially last week in that dip, and then today people are calling in and selling, but nobody's selling any gold on the retail side. And sure, if small U.S. retail buyers aren't selling, China sure as heck isn't.
When it gets to the core of why it's suppressed in the first place, because it's an alternative currency. I mean, it's an actual currency cross, dollar gold, yen gold, you know, pound gold, euro gold, whatever, because to buy gold, you are selling your fiat currency. I mean, you're exchanging your worthless fiat currency for sound money. To your point, Doc, if someone's going to now sell gold, they're exchanging it back into paper.
Right, they're really buying dollars. They're buying paper dollars with money, exactly.
Yeah, what fool would do? I mean, you have to really be brain dead to do something like that. Jeez. So anyway.
Well, that's a kind of a good segue here for a quick update on the wholesale market in the U.S. with silver. We saw a lot of big demand come into the market on Wednesday as price jumped up $2, and really never ceases to amaze me that the buyers come out of the woodwork when price is screaming higher and no buyers can be found on big sale days like today. It's hard to believe, but that's sentiment and market emotion for you.
Yeah.
90% had been available live really across all wholesale suppliers, coming down towards closer to normal premiums for the first time in, I'd say, since last September or October, about a year, till Wednesday, and now it's all gone again. So that's your update for 90%. The 100-ounce bars are about the same. A couple of the suppliers now have both Johnson Matthey in stock. A couple of suppliers have RCM bars live and in stock, and some of the other private mints like Golden State and NTR and some of those, they're all caught up and live. The main mint products, the silver maples and the silver eagles, are live to about a 2-week delay across. And premiums really held steady throughout the week, even with the big jump on Wednesday. So not too much change at all there on premiums and availability wholesale here in the U.S. All right, I wanted to get back to what Turd and Eric were discussing a couple of minutes ago as far as the G20 and the dollar reserve status and the BRICS move towards alternatives. And I want to cover what I think is outside of the Fed, which all of the focus has been on this week. One of the biggest stories of the week and probably the year that nobody has discussed or covered yet. I haven't even actually mentioned it to Turd or Eric yet. It's a story that's just breaking here in the past day. It's not even been on Zero Hedge or anything yet, but the president of Brazil, there's been a lot of news reports that Dilma Rousseff was kind of rebuffed from the U.S. and is not making the trip to the U.S. The president of Brazil came out, I believe it was yesterday, and has announced the creation of an alternative world internet system independent from U.S. and Britain, or the U.S.-centric internet, basically as in response to the Snowden revelations of the spying. But it's going to be basically a BRICS internet cable that runs really from Russia to China to India, Cape Town, South Africa to Brazil. It's actually in the process of being built already. It's in the final phase of implementation. They said it's going live in early 2015, and they'll have the capability of setting up their new alternative SWIFT system. So this hasn't really been reported much anywhere, even across the alternative U.S. media, but just another big indication that the dollar reserve status and really Great Britain and U.S. dominance of the U.S.-centric internet even may be ending soon.
That's a great story. I've not heard that one, Doc. I heard that she wasn't going to come to the U.S. and meet with Milhouse, but I'd not heard that part. Hey, that's right in line. I mean, that's just more circumstantial evidence that all the stuff that we talk about is right on the money. I mean, they are moving forward. They see the world of the 21st century, and they are getting ready for it. And
it's symptomatic too of just the U.S. Hitting peak empire. Basically, yeah. You have geostrategic shifts going on, and in order for national security, for economic espionage security, they need to have their own information flows that are not being controlled by what has developed out of the ICANN system, which is entirely a legacy built upon ARPANET. The whole internet is built upon an infrastructure that the United States created. So it had the ability to go to the NSA and say, hey, yeah, go put your sniffer boxes inside the AT&T box stations, and you can, know absolutely everything as far as where packets are going. Where information flows in this day and age, money flows. And it's sad to see all of this because basically this didn't have to happen. I mean, if we had an enlightened economic policy, we would probably have already tried to deal with these whole banking crash sector instead of trying to paper it over. We just have a monetary reevaluation of gold instead of shipping it all to China. And that's what we're doing. As a stalling pretend and extended pretend strategy, we're basically shooting ourselves in the foot, and it's really disgusting to watch.
Right. Shifting the topic back to the metals here in the U.S. and the markets, we discussed Bullard today trying to stuff the genie back into the bottle of, we didn't taper here in September, but we'll taper in October, as really all markets are exploding and the Fed realizes that they've got to manage expectations back the other way again. But behind the scenes of that, we're creeping up on another debt ceiling crisis here. There's not too much time left before all of Jack Lew's gaming options are off the table and all of the funds are completely raided and they're down to their last penny. The Republicans in the House today voted to pass the measure to defund Obamacare. Obviously, the Senate's not going to pass that, and Obama wouldn't sign it anyways, and they'll send it back to the House. But the House is threatening to stand firm, and really it's seeming to shape up just like 2011 again, where there's a lot of grandstanding and waiting to the last second, and we could definitely see another debt downgrade. If you think back to 2011, during that whole shenanigans is when gold moved, I think, from around 1,500 to 1915 in the span of about 3 months. So what are your guys' thoughts on that?
That's where we stand, and it's not clear where we're going to go. And then as a backdrop to all of that, earlier in September, we had the 10-year note hitting 3% plus yield. The whole credit system is beginning to creak under the pressure of the threat of the removal of tapering. So It speaks to the fact that the Fed is stuck, and all the fundamental aspects for higher gold prices remain, despite the fact that, for whatever reason, the media is reporting the exact concept.
What's your thoughts, Turd? Is gold going to respond again?
Yeah, and I would imagine it's done this way politically so that, as you said, they'll kick all that stuff back to the House, and then they'll just go ahead and pass all of the budget ceiling increases and the continuing resolutions. But the Republicans will be able to go home and say, see, I voted to defund Obamacare.
Right.
So it's all just done. It's all just theater. It's nonsense. Whether S&P or anybody else is bold enough to downgrade the U.S. again, considering the ramifications for S&P the last time they did it, notwithstanding.
Yeah, we do have to point out that S&P was served a lesson for that last time.
Yes, they were. And I talk about a shot across the bow to anybody else that might ruthlessly consider telling the truth.
Yeah, all the other credit agencies were quiet at the time as well.
Yeah.
They were afraid of having that shot across the bow.
Egan Jones has already had numerous warning lessons.
Yep. All you got to do is look at that, that one chart of gold price that lays over the total accumulated debt. And you can begin to see how mispriced everything is, and that trend hasn't changed. It's just the banks have manipulated price lower in a desperate attempt to get out from under all of their naked shorts before the system breaks down.
There's actually one aspect to that makes it even worse, and that's, the correlation you're speaking of is something that totally negates all the silly arguments that people make about, the banks have all of this money sequestered onto their balance sheets and then the Fed depository, and there's no money moving in the economy, therefore velocity money is dead, and who cares about inflation, et cetera, et cetera. You know the argument well. The thing that makes it worse is that all the while in the last years that we've been since the 2008 crash, the banking sector has gotten more consolidated, and their derivative positions have gotten worse. So in addition to the debt you can see and lays on that chart, add on to that, 300, 500 million, billion dollars worth of notional value? I mean, it's just, all it is doing is making a time bomb that is worse to deal with, and in fact, the Bank of International Settlements is beginning to talk about this in the media as well too. It's so bad that even they're getting nervous.
And not only is the derivative time bomb bigger, but now it's tied around depositors' waist with all the bail-in legislation and code.
There's not enough money in the world to cover that kind of bomb if it goes off. I mean, it would just be the equivalent of nuclear winter. And
it gets back to then, in the face of all that, why would anybody exchange their physical sound money back for paper money? Regardless of whatever happened today and how discouraged you might be because of this ongoing capping and the clear manipulation, screw them. Let them do it. Whatever. Fine. Knock yourself out. Call the doc and buy yourself some more physical. I mean, that's the only thing you can do, because all of this is right there in front of you if you choose to see it, and it's all going to fall apart eventually, and you just have to be prepared for it, because there's no way out at this point.
And it will most likely be an overnight or an over weekend kind of thing too.
And when it happens, just like Eric said, it's most likely overnight, over weekend. And look at population in Cyprus. There's once it's reported, everything's locked and your funds are frozen. So the time to protect yourself is now. The handwriting's on the wall. Unfortunately, we can't give you an exact date. We're not prophets to see the date in the future, but the handwriting's clear enough to anyone who has eyes to see. It's up on the wall of what is coming. So to recap here, obviously the big news on Wednesday of no taper, metals exploding to the upside, and then kind of capped on really late afternoon into Asia on Wednesday. Throughout Thursday, silver was capped around I think what was it, 2350 in gold as well, and then the big hammer today, starting prior to Bullard's comments, and then just letting the avalanche get moving, and the momentum throwing the metals back to the downside with giving up most of their post-FOMC gains. But the fundamentals haven't changed, and from an emotional perspective, it's hard for those with a large portion of their wealth or investments in gold and silver. But I think back to a statement Jim Sinclair has long said, be right and sit tight. It's not hard to be right. It's hard to sit tight throughout the bull market. So for the Doc and Eric Dubin, thanks for joining us in the SD Weekly Models and Markets, and thanks once again to Turd Ferguson for joining us again. It's great to have you back as always.
Yes. D. Buoyant.